Look, when you look at Tesla, it's gotten off to a pretty rough start in 2015, down at least 5%. And over the past 12 months, it's basically treaded water, even as the broader market returned more than 16%. Of course, if you bought the stock when it IPO'd at 17, you're sitting pretty. But today's chart shows how fundamentals are starting to drive the share price. Let's take a look. The yellow line tracks analyst estimates for Tesla's first quarter 2015 sales. Steadily been ratcheted down. It's now at just over $1 billion. The white line tracks Tesla's share price, which peaked at $291 in September and has been losing ground ever since. Today, Bank of America analyst John Lovallo cut his price target on the stock to 65 from 70. Not surprisingly, he already had an underperform rating on the stock.
Scarlet, a call of $65 when the stock's above $200 means the analyst expects a drop of almost 70%.
Yeah.
You look at the Bloomberg terminal, no one even comes close with the second lowest price target, what, around $120?
Yeah, put it this way, Mark. There's a $335 gulf between the highest price target in a Bloomberg survey of analysts and this most recent revised price target from Bank of America. The turn in the stock may have come last September, but the fourth quarter earnings report from the company earlier this month was reality check. There was an unexpected loss in the fourth quarter, a larger than expected capex plan for the year, an overly rosy outlook in China. Bank of America's John Lovallo says that Tesla's using a strategy of issuing long-term targets that are intended maybe to offset or distract from a steady stream of negative news and weak financial results that include a cash burn. Long-term goals like diversifying into home battery systems over the next 6 months, which Bloomberg View columnist Edward Niedermeyer calls a distracting dead end.
Yeah.
But maybe, Mark, looking at Tesla as a normal company could be the mistake here, because Niedermeyer writes in Bloomberg View that, like space travel itself, buying a Tesla or a share of the company isn't something you do because you expect it to return some specific return, but because it appeals to some deep human need for adventure. But that adventure may just cost you in the end.
Okay, but Scarlett, talk to me about the bullish argument here. Demand's not a problem? Is that what they're saying?
Well, the bullish analysts will say that demand's not a problem. Stifel Nicholas makes that point, and they have the highest price target on Tesla with $400 over the next 12 months. But the pushback from Bank of America and other skeptics is that the economics of electric vehicles are not as compelling as investors may have priced in. Customer deposits on the balance sheet, for instance, reservation payments, are not the best gauge of demand because they're influenced by vehicle mix and regional distribution. So the issue, perhaps, is a lack of demand, and Tesla appears to be pulling back on production, according to Bank of America. Mark?
Scarlett, I got to ask you about the China reference you mentioned ago, because you said overly optimistic.
Yeah.
There was some concern that charging might be difficult in China, right?
Yes, and that perception has led to a big drop-off in actual sales in China.